Hi fellow traders, I'm making this video to share my AUDNZD trading plan with you. So I'll let you know my entry point and my exit plan before I explain to you what all factors I considered to take this position. So my entry price is 1030. So you can see this is a horizontal line, and when price penetrated below this line is 1031.1, and I took my position at 1030. So this is entry, and if I talk about the exit plan, so um, I'll have to go to daily time frame, and if market returns to the upside and if any candle closes above high of this candle on daily time frame, I'll exit. Or if market continues falling and if it touches this lower band of Bollinger, I'll take profit and I'll exit. So this is my exit plan in both scenarios. Now I'm going to talk about what happened in Australian dollar and New Zealand dollar after Russia Ukraine. I'm going to talk about this because this has given me the background for this trade, and I'm also going to talk about resistance zone which I have identified on AUDNZD, and I'll tell you there is a chart pattern which I have seen on 4-hour time frame, and I'll let you know why I entered now at 10:30 and what was the triggering factor for this entry, and I'll yeah, that's all. So uh, let's start with looking at the major pairs separately. So I'll plot AUDUSD and look at this horizontal line. This is 20. Okay, so if we put our pointer here, this is the date when Russia invaded Ukraine, February 24th. Initially, Australian dollar has been going to the upside because of its correlation with gold, and everybody knows that gold has been going up after this invasion of Russia, because gold is a safe currency. So because of the positive correlation with gold, Australian dollar has also been rising for the time being. However, the Australian economies was similarly impacted like Eurozone or the UK. So lately, Australian dollar started falling and it made a lower low than the previous low. So this is the story of Australian dollar after the Russia Ukraine war started. And if we look at the New Zealand dollar is positively correlated with Australian dollar, and it always follows Australian dollar. So the uh, price action in New Zealand dollar was also similar. However, it is just a follower. So when Australian dollar was rising because of the correlation with gold, New Zealand dollar was not rising with the uh, similar 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 bullish pace. So it was rising gradually, and when Australian dollar started falling, New Zealand dollar started falling with even faster pace. So fall in New Zealand dollar has been greater, whereas the uh, rise in New Zealand dollar was less compared to the Australian dollar. So that's why after the February 24th, you can see that Australian dollar has been rising against New Zealand dollar consistently. So this is the candle of February 24th, and since then you can see market has been in an uptrend. So this has been a story of Australian dollar and New Zealand dollar after this war. But now the effect has effect this effect of like a leader and the follower is like kind of fading. So New Zealand dollar is going to correct its losses against Australian dollar, and there is a significant reason, and that we can see on weekly time frame. So let's go to the weekly time frame. Here is a resistance zone, and or NZD has already reached there in a resistance zone. I'm going to draw a rectangle to show you the zone. Okay, so here I go to the shape and I'll plot it here. So this is what I would say. This is a resistance zone, and price didn't stay in this zone for a long time. Like last time, you see price was here, and then there was a significant bearish swing, then price was in this zone, then there was significant bearish swing, price touched this zone, bearish swing. So we can expect a similar similar we can expect a bearish swing of similar magnitude. However, we do not need such a huge bearish swing of something like 600 pips, or a swing of like 855 pips or something. We just need 100 to 200 pips, and we will be exiting at our take profit level. So let me delete this rectangle for the purpose of making the chart clean. So this is the resistance zone, why I think that the movement to the downside is even more probable. And if we look at the 4-hour time frame, we have a double top pattern here, which is some sort of triggering factor for this trading, because if we talk about the weekly time frame, there can be a swing of 500, 600, or maybe 800 or 900 pips to the downside, but we are not going to target 800 or 600 pips. We are going to target something according to this double double uh, double top. So the point of showing the weekly time frame was just to make sure that when there is a probability of like 5 to 800 pips fall, we can easily take 100 to 200 pips and we can get out. So it's like taking the smallest portion and getting out as early as possible. However, I'm trying to keep my risk less than what is there on the table for the gain. So my risk is not less than not bigger than 100 to 200 pips. So as I entered here, my risk is something around 136 or roughly 140 pips. When I talk about pips, I mean pricing in 4 digits. So when I say 140 pips, or when I say 800 pips, it means 8,000 points, or when I say 140 pips, it means 1,400 points in five digit pricing. All right, so this is my risk. And now I already told you that my TP, I'm going to exit in case of profit when it will touch the Bollinger Band to the this lower Bollinger Band. So if I calculate the price from here, it is giving me only 118 pips from 1030 area, but this is going to increase because this lower band will move to the downside as price will fall, and this will give even more than 140 pips by the time price will fall and touch this lower band. This is not how Bollinger Band is traded. This is not the classical way of trading Bollinger Band, and technically I'm not trading Bollinger Band. I'm trading some sort of overbought condition on AUDNZD weekly time frame with a triggering factor of double top on 4-hour time frame, and to take 140 pips or 150 pips. So, but however, I don't want to go against the Bollinger Band. I believe that price can return from the lower band, and which is why lower band can be a significant support. So I don't want to keep my target beyond the lower band, which is why I'm discussing band. Otherwise, this is not something like trading selling at the upper band and closing at the mid band, and buying at the lower band and closing at the mid. This is not this kind of classical Bollinger Band trading. So, but yeah, I am using the lower band just for the target. Coming to 4-hour again, I'll talk about the triggering factor. So the when price actually fell yesterday to this area, that was last hour of yesterday, and that's why I was waiting for price to at least penetrate below this neckline, because this is the double top, left top, right top. Right top is little faster, which is suggesting faster price action, better for our trading. But price just moved to the upside without even penetrating the neckline. Neckline is 10.31.1, and when it started going to the upside, I was waiting to see whether this is going just to be the oops pattern. Oops pattern is when a classic pattern fails, whether it's a double top, double bottom, head and shoulder, or inverted head and shoulder, or any kind of pattern with any kind of classic pattern. If it fails, then it is said to be an oops pattern. So that's why I didn't take the entry early, any early entry, and I waited for further price action. And then price started moving down today, and when it penetrated when it came to this area again and penetrated below this 1031, I took my sell position. So this is how my trade triggered. So this was the triggering factor. And there was something else which I actually considered. Whenever there was an uptrend, and if you are going to trade against the trend, you'll have to find out a point from where price is probably returning. So if we look at the daily time frame, we clearly have an uptrending situation, not only since the Russia-Ukraine war started, but also even before, like since November it has been in the uptrend. So, and if we are trading, even if we want to trade the band, Bollinger Band, I will rather suggest to ignore all the sell signals. So just forget the classic idea of like selling at the upper band and closing at the mid. I would rather go with the trend, and I would simply wait for all those opportunities when band touches the lower band. Sorry, when the price touches the lower band, and I would rather always buy at the lower band and close at the mid, because I just want to be bullish according to the trend. So this should be a idea, this should be a proper trading in case of such trend. But when I'm going against the trend, and I'm gonna sell something around the mid band, so obviously I'm not complying with the classical style of trading a trend. I'm not complying with classical style of trading a Bollinger Band either. I'm totally going against. So I need something to make myself double sure that this bearish movement is going to continue, which is why I looked at something else, that is and by which you can figure out whether or not price is slowing down, or whether or not this trend is going to be like saturated, and market whether or not market is going to reverse the direction, at least for retracement, even if not, it's not going to be the reversal, right? So I looked at this 4-hour time frame to understand if a trend is slowing down, and a price can take the dip reversal against the previous trend. You will have to find divergence. Divergence is another way to find out if the trend is slowing down. So what happens in case of divergence is market makes higher high, but the oscillator doesn't make higher high. So if we compare the high from here to here, all this is like higher high on the price, but if we look at the oscillator, this is obviously lower high. So this shows that the despite market is moving to the upside, the pace of upward movement is slowing down, and there can be a deeper retracement to the downside. So this bearish divergence also supported my selling idea. So these are these are all factors which I took into my account to figure out this trade setup. And that's all. Thank you for watching. Let's see what happens in upcoming days. Market may take a day or two to reach, I guess, the lower band.